Okay, we started live streaming. I'll probably need a textbook.
Oh, okay.
So anyway, Tara, I guess you're live streaming out there somewhere, and all others who are live streaming, we're going to have a test coming up soon on a couple of chapters that would be 6 and 7. I'm going to let you use a page of notes, one page, one side. I don't care how small you write or how little your funds are, put all you can in these 2 chapters, and hopefully it'll help. That's because I think these 2 chapters are pretty tough, especially chapter 6, when you've got perpetual, buyer, seller, that's thrown in a couple of new terms, refunds, payable, and so forth. So, and a test will be coming up soon. Depending on what we get done tonight, it may come as early as this Tuesday, which is our next meeting. I'm giving it next week to my day class. But then if we don't get it ready for it, we can go on to chapter 8 and I can still put the test off till the next Tuesday. This is October the 24th, and time's moving on. We've got one more night in October. That would be the 31st. We've probably got about 3 nights in November and 1 night in December. So we've got about 5 nights remaining. That's to cover the last 3 chapters too, and have a test and exam. The exam is just a test on the last 3 chapters. So that's where we stand. Our 4 international students, they're down over the hill, and they had a lot of food down there. Mr. Lyman was telling me he tried the chili from Spain. I didn't try it. He said it's some of the best chili he ever ate. Of course, they started off with a pizza there made at Sam's Wholesale. That was not international food. But moving on around, now, Arthur from Paris, I don't know if I think he made it. It was something, I forget what it was, but it was sweet. And then he made some kind of chocolate. It was like a pudding, but it was deep chocolate. But it was good. A lot of food from Spain, which little Eva helped make, and it was good. But a couple of things in particular were good, and a couple of countries have, of course, fried rice. Now, this India or Pakistan, they had salad beans and something in them. They were pretty good. But anyway, they had a lot of different foods. And one country, the first country I went to, it's not a country one of our students were in, but whatever it was dry. And I forget what Millie made from Serbia. I get Serbia and Siberia mixed up, but we had both countries down there, and so on. But thanks to them, they did a good thing, and a lot of people enjoyed it, students, and so on. A few faculty, but I don't know how many international students we have, probably at least 20 or so. We have some gentleman, I forget his last name, he helps recruit them. Our tennis coach recruits them, and so on. And I just think it's wonderful that we have them on campus. And most of them are excellent students and so forth. So since I've been up here 9 years, I'd hate to try to count the countries. Probably I've had students from at least 30 different countries. And I guess when I started up here, I had 4 young men from Saudi Arabia, which right now in the news, our country's not liking what they did to a Saudi Arabia citizen that had a green card, I guess, in this country and was writing for the Washington Post. Supposedly they cut him up in pieces in their embassy. But I had a young lady also from Saudi Arabia. Of course, she never showed her hair, always had the band, the scarf tied around her head. But she answered a lot of questions about women couldn't drive, and you had to have a man in your family that could drive you places. And I asked her about the women out in the country, if they didn't have a brother, husband, or uncle. She said in a few cases, then they'd let the women drive. And I asked her something about food. Well, probably they did have McDonald's. But, her husband would go out and pick up breakfast for her at McDonald's if he wanted to. But you all heard about McDonald's from some of these other students in their country. It's just totally, totally different and so forth. So food around the world. It sounds like Millie's country eats all organic. It's all fresh food. And you heard her say that she gained 15 pounds when she came to this country. And we have a lot of greasy food, fried food, fast food, and so forth. And our organic food is a lot more expensive. So food around the world, it's interesting. And they had a lot of pictures up of their country. And of course, Spain, places there, all countries look beautiful and so forth. So, and of course, I think John had a picture of the Eiffel Tower. And they said, you've got to eat some French food since her name's Paris. So I told him I'd go there someday. I do plan on it. Anyhow, folks, getting back to accounting and some of the things we're supposed to do, what homework, if any, did I give you that was due tonight?
4A and 5A.
The what?
4A and 5A on page 332.
All right, I'll bring up those solutions. First, we'll look at those and we'll look at a couple other problems and so forth. Now, what we're on is inventory. And the first thing we're going to do is practice a little bit of inventory. I'll bring up my notepad here. If I didn't live stream this class, I probably wouldn't have had Tara, and probably, I don't know what would happen to Chris and Miranda. They probably had to miss a lot. But live streaming is just a modern way of delivering a class to other people that's not sitting here. Of course, my favorite way of teaching was have the students sitting in class and I had a blackboard, okay? Even though I was about to get white lung from using white chalk, okay? But anyway, those days are gone. Now, I started teaching when the electronics started getting popular. Some of the folks at the community college actually put a class on, what was the old music from Apple? Was it iPod? But actually they had an iPod class that students could just get on their iPod. I started off taping a class. AV would come over and tape my lectures and they'd put it on an 8-track. You remember those old big clumsy 8-tracks, and students would check them out through AV and take their class that way. Then we went up to the electronic classroom, and what we had, I would have 4 TVs in front, and I had students from Mountain Empire Community College and Withville Community College, and I had them sitting in class, and then I had them for our campus on another campus, Grundy. So I had 4 sites, and I had about 5 students in each site. That gave me 20 students that helped numbers. And so we used that system a long time. When I first came up here, we had something similar to that at Beckley. My students could sit in class at Beckley and watch us here live. And I could flash them over to Beckley once in a while and let my students here see the students in Beckley. So that went away. And then came the old classroom that Dr. Bourne and I think Dr. Sneed still uses. It's similar to what we got now. But you had to go into the Bluefield State Video Center to get the videos. Here, everything's on YouTube. If you ever cannot find my class, if you miss, and you can't find it, go to Moodle, click on it. If that don't work, you can go straight to YouTube and find it. Okay? And YouTube keeps it forever. YouTube never fills up. Okay? And I guess I could search through mine, and I probably could use the same classes next year if I wanted to. But I won't be here next year. I'm finally going to quit. Okay? Retire or something. I retired at the community college 9 years ago. And I called Dr. Bourne, who was the real dean then, told him I'd like to teach a course part-time because I had taught here in 69 full-time, 79 full-time, and I'd taught part-time. So he taught me into coming up full-time 9 years ago, and here I am. And I never wanted to work this long. This is my 51st year of teaching. All right? That's 6th grade, 8th grade, business in high school, and marketing for 10th, 11th, 12th in high school, community college, and now here. So a lot of grades, a lot of ages, and so forth. So but I will have to tell you, I started teaching when I was 10. Anyhow.
We believe you.
Do what?
We believe you.
I know you do. I started teaching at a community college with just a BS degree. They needed an accounting instructor. And to confess to you all, I didn't learn accounting until I taught it. Okay? I really learned accounting principles when I taught accounting principles. And all my students then were older than I was, but they all did well. Accounting helped them improve in their jobs or get different jobs. This first year, the community college opened their doors. But anyhow, now I don't have anybody older than me, okay, in class. So that's the way it goes. But Dr. Bourne asked me to come up here and teach full-time that year. I thought that was it. They wanted another year. I thought that was it. So I told them to search. They searched for somebody. They didn't like the applicants they had. They asked me to stay. I stayed. And then they searched. And again, I guess their top applicant turned it down. I was here another year. So that went on. That's went on for 9 years, and I'm still here. So I'm frankly going to tell them now that I'm is here full time, and they can advertise for somebody else. So, Evan, are you majoring in accounting?
Majoring in management.
And how about you, Morgan?
I'm probably switching to.
Huh?
I'm probably switching to accounting, but it's management right now.
And how about you, William? Accounting. And we've got some pretty good day accounting folks. So the accounting program needs to grow, and we're going to we've done away with accountancy this year, but we're probably going to bring it back. With accountancy, you don't have to have a minor. And like Evans in management, he's got to declare a minor in accounting or marketing or something. And if William is in business administration accounting, he has to declare a minor in management. The best minor, when we used to have it, was a major in accounting and a minor in computers. That was a good combination. And I encourage my students at the community college. But at the community college, with a 2-year degree, I have one student with a 2-year degree that's president of a pretty big bank down in Richlands, and 2 or 3 branches. Some of them went on to 4-year colleges. Some got their CPAs, and they've done well. Okay. Now, we've got an application here that I looked at today, and the student wants credit for accounting that you're taking 201, 202. And they took their accounting at American University, which used to be National Business College. My deceased wife went to National Business College, transferred to ETSU, and lost everything because American University is not accredited. The credits will not transfer here, but for the Board of Regents degree, we can give them credit if we think it's the same class. So Mr. Imo and I looked over the class. It's not one of the popular accounting books that we use, but anyway, the dean of the School of Business there was one of my students. All right. He was a good student in principles. He did go on and get a BS degree, but I think he started teaching there with a BS degree, which you can, and they pay you by the hour. I think he went on and got an MBA. So he is the chair of the department. And that was our instructor. If I can talk to him, what he covered, what he gave on a test, you know, we might could give this person credit for it, for the Board of Regency degree. But I wouldn't want students to think they can run down to American University, get accounting 1 and 2 real easy and transfer it in here. That'll never happen. We won't let it happen. Okay. But that school is just, I don't see how they get students. It's just not accredited. Courses will not transfer anywhere. And we are censored by all kinds of accreditation associations. Okay. Anyhow, let's look at periodic. And to do this real quick, I'm going to take a beginning inventory of 100 at $1. I'm going to have a purchase 1. Do not need dates on periodic. And a purchase 3. We'll go 200 at 2. And we'll have inflation and go to $4. Okay. All right. I'm going to buy 2 more 100. And then I'm going to buy 100. All right. Now we know that we have 600 there. I don't see how there'd be that many night students. Anyhow, we got 600 units. Now that's what we had in beginning inventory, and we know that beginning inventory plus purchases gives us the units available for sale or merchandise available for sale. And if we subtract ending inventory, we get cost of goods sold. But we don't need that format. Now you just need to know that I've got 600 units. I have 110 units left. I go out and count them. Now, these are identical inventory items, but we got to put a price on them for the end of the year inventory. Now, we can put a $1 price or a $4 price, but there's no way you can go in the middle and put a $2 or $3 price. FIFO and LIFO are widely recognized for all business and for IRS. All right. Now, William, which 110 do I have left under FIFO?
Should be 100 at 4 and 10 at 3.
He got that perfect because we sold 100, 200, and 190. First in, first out. All right. Now, what would that add up to? 4 times 100? Wait a minute. 10 at 3, That'd be 30, wouldn't it? All right, $430. Now keep that figure in mind, $430. Write that down somewhere. That's FIFO. Now, I want LIFO, and Morgan, what 110 do I have left under LIFO? I sold all the last ones. So what 110 do you think I have left? Just do the reverse of what William did.
100 at 1.
All right, that's reverse, isn't it? And
10 at 2.
all right, that'd be 100 and it'd be 20. Your answer is 120. All right, now if I want to do average, I've got to add up all my purchase price. That's 100. That's 400. This is 600. And this is 400. Yeah. That is $1,500, isn't it? Okay, to get the average cost, divide by 600 units. All right, what does that give me? Does that give me something like 250? Do what?
It has it. Gonna say 270.
6 into 1,500? It should be 250. Is it? I'm just doing it by looking at it.
Should be 2.5.
What?
2.5.
2.5. That's 250 of it.
Yeah.
All right. Now, keep that figure in mind. Now, this cost was $1,500. You said the average cost was $250. Okay, now, Evan, I'm going to ask you, did you jot down what the FIFO was? Okay, now, real quick, how much was FIFO for?
430,
And LIFO was,
120.
and average was 250 times 110.
275.
Somewhere in the middle of those two, but it don't have to be equal. Now, a question on your test might be, what is cost of merchandise sold? You just gave me 3 answers for my ending inventory, but I might want cost of merchandise sold. So I subtract the 430 from 1,500 to get my cost of merchandise sold, right? And I subtract 120 from 1,500 to get my cost of merchandise sold under LIFO. And 275 from 1,500 to get my cost of merchandise sold. Now, which one gives me the biggest cost of merchandise sold out of these 3? Which one gives me the biggest cost of merchandise sold? Which one? All right, if I subtract 120 from 1,500, that'll give me 1,380. That gives me a big cost of goods sold, don't it? So for tax purposes, it looks like LIFO would have been the best. The bigger my cost of goods sold, the less my net income, right? The less my net income. All right, now we've looked at 3 methods, inventory and cost of goods sold. Now we're going to look at 3 methods for perpetual. Now, I gave you some paper last week, didn't I? And what problems did you have to put those papers on, Morgan?
4 and 5.
All right.
Now we didn't. You're talking about these?
We didn't use one for homework. All right. We did one in class only, right?
Mm-hmm.
All right. But we will get to them. You'll need them. Now, on the test, I will provide those forms. Now, remember, you can have any, whoa, what am I doing here? You can have anything you want written down on that piece of paper. Mr. Imo is letting his intermediate students have 2 pages of notes. But now when I taught intermediate, I never did let them have any notes. He's been good to them, which is okay. And we had 15 and what? 16? I mean, 4 and 5, sorry. We're going to back up and do an exercise or 2. And then we'll have some homework. I gave you the problems. The problems, 4A and 5A.
For chapter 6, not for chapter 7.
Oh, wow, I'm ahead of myself then, right?
You didn't assign chapter 7.
Wow, then we can't have the test next week. It'll be 2 weeks from tonight. Well, chapter 6. We'll switch real quick and I'll get you caught up in chapter 7. Now, in chapter 7, we've looked at 3 methods. Now we're going to look at perpetual. We did 1 on paper last week, right? But we'll do more. But chapter 6, I wanted you to do, yeah, I can see why I gave you 4 and 5A and 6. Bottom line, we've got about 5 nights left. We got to finish chapter 10. So I used to finish 14 chapters a semester. That was too much. And probably 10 chapters a 7 is too slow for a few people, but it's too fast for a lot of people, probably. But it wouldn't be a course if we watered it down anymore. We'd take our principal's book and make it a 4-semester course. We can't do that.
8, 9, and 10 chapters that test.
The what?
The last 3 that test.
Will be a test, 8, 9, 10. All multiple choice on those chapters. So I've got to grade them fast and get in grades. If we were looking at problem 6.1a, just to review, on the first, we bought inventory. On the second, we bought inventory. A third. On the fourth, we bought inventory. Now, it looks like on the 6th, what do you think we did on the 6th there, William?
It looks like you sold.
No,
No.
we don't debit accounts payable now when we sell something. Morgan, any idea? Now, right here, we paid for the remainder of our inventory. We paid this inventory right here. All right, we just simply debit accounts payable, credit cash. But here, Evan, do you know what we might have done here?
Did we get a customer return?
It probably was a customer return. It reduced our accounts payable, and we got to credit the inventory. We don't have it anymore. On a periodic system, you'd have to credit purchase returns allowance, but I'm not going to give you any interest on the periodic system. Just perpetual, buyer, seller. All right. Now on the 13th, we paid. On the 14th, we paid. So we had to take out that return. On the 19th, we bought more. On both 19th. On the 20th, we must have returned. On the 30th, we paid. 31st, we paid. And the 31st, we paid. Now, we bought this merchandise. Do you think that was all right, this merchandise, what do you think we did here? Anybody? Morgan, can you tell me what we did?
You took out paid it within the,
10 days.
yeah.
So we record that net. We recorded that net here and we recorded net here. But we did something right here. What? We added on transportation. It was FOB shipping point. Now you better know those two items. I've got them in multiple choice. FOB shipping point and destination. Now here it's FOB, that's a shipping point. And you, the buyer, pays. Now you can pay that yourself and debit merchandise inventory 220 and credit cash. The company you bought from paid it for you. All right. So you owe them 2 extra 20. That's why you're adding it on. You're adding on the merchandise and you owe them 220 because they paid it for you. All right, that was problem one. Problem two is the seller. And you will have entries on buyer and seller. All right. Here on a perpetual system, we make a credit to sales. And you make this same entry on periodic. But under perpetual, we keep a running total. And we debit cost of merchandise sold and credit merchandise inventory. All right. Now, when you post a debit to inventory and a credit to inventory, you should have a total in your inventory account. But when you go out and count your inventory, it don't match. That's called shrinkage, isn't it? All right, you know the story on sales tax payable. That'd be in an entry. Here we had a sale and cost of goods sold. Here we had a cash sale and taxes payable. These are all sales, cash or accounts receivable. That's it. And every time you're making two entries, one to take care of cost of merchandise sold. Now to continue, all right, somebody sent you back some merchandise, 4,800 less the discount. When they sent it back to you, the old book called that sales returns and allowance. Now we call it customers refund payable. Now you put it back in the inventory. And the old book would credit cost of goods sold to reverse that. But here we credit estimated return inventory. And we still have to work that out to get our cost of goods sold. All right, accounts receivable sales, and then we collect cash and accounts receivable. And then we had to pay here. This was FOB destination. The seller pays for you. Now the seller debits delivery expense. The buyer would not even have an entry there. And if you pay credit card expense, just debit the expense and credit cash. And when you send your sales tax to Charleston, West Virginia, all right, 3 is accommodation. No, you're just buying inventory. Well, you got a few accounts receivable in there, so you did sale. So 3 was a combination of both. Now that's going to bring us up to 4A. Now we'll look at that. William, what's going on in the world news? Morgan, do you know?
Not really.
Evan?
Just that Saudi Arabia guy got killed.
Yeah, that's old news, 2 weeks ago.
Election.
What?
Election.
Yeah, they've been harping on the election for
That's
6
never
months.
ending.
Huh?
I said that one's never ending.
Right. Of course, the judge, that was big news. But there's a caravan. All right. Do you know about the caravan?
I heard about it. Was it a Mexican caravan?
No, they came from Honduras and El Salvador, maybe. Now, I had a student one time, no, he was from Guatemala. These came from Honduras, El Salvador. They're Central American companies way down. They're Hispanic. They got together. It was 3,000, 4,000, 7,000. It may be up as high as 10 to 14,000. They just pushed themselves over the Guatemala border into Mexico. Mexico could not stop them at the Mexico border. And now they're marching through Mexico, traveling about 40 miles a day to the United States border. They want to come into our country. A lot of them are able-bodied young men. President Trump says there may be some criminals, may be some Middle East, drug cartel, child sex trafficking, whatever. But they're coming to our borders, 7 to 14,000. If they come into our country, we got to feed them and shelter and school them and whatever. We'll try to haul them back. So that's a big problem. And a lot of people feel like, well, all of us came from some other country. Do you know your ancestors, Evan?
Yeah, somewhat.
Where do you think they came from?
On my mom's side, they're from the Dominican Republic, and then on my dad's side, they're all Jewish. So I guess Israel or Russia.
Okay.
Something like that.
So you've got a lot of South America and Middle East in you. Okay. But we all came from somewhere. I do have some American Cherokee. But I have ancestors from Ireland and Scotland and England and so forth. But Evan, your ancestors probably come in this country legal. These people are trying to push themselves over illegal. And a lot of them at one time. So I don't know what's going to happen. Now
What's
that
his plan?
the what?
What's Trump's plan? I haven't heard anything.
How they what?
What's Trump's plan on it?
Don't know. He's going to send the military, Border Patrol, National Guard, whatever. But how do you stop them? They just ran over Mexican police. I don't know if they use tear gas, load them up in buses and take them back. I don't know. It's a lot of people. I don't want to see any of them hurt. They just want a better life that we have. But their country, their leaders and everything's not trying to give them a better life. We can't take everybody in just because they want a better life. They should come in legal. Now, the other big thing happened this morning, we'll mention this and we'll move on. There was a bomb sent to Obama, one to the Clintons, and one to CNN, and one to George Soros's home. Well, we know Obama and Clintons are Democrats. We know CNN is pretty much a big Democrat channel. And we know George Soros is a big liberal. He helps all Democrat causes. And it looks bad that it all went to Democrat places. So if a Republican did it, it looks bad on the Republicans. If a Democrat did it to make it look bad on the Republicans, that's even worse. Now, you can't mail the Clintons or the Obamas a bomb. It has no chance of getting to them. They have Secret Service people that goes through all their mail before it ever gets to them. Even the post office don't catch them. George Soros, I don't know how they discovered his bomb. It was in his mailbox. CNN's went to CNN. They opened it, had a white powder, and they thought that could be anthrax. And I guess they dismissed some of their employees. But pranks like that has no place in our country. And if we let in 7,000 people that are not screened, we don't know criminal background. So I think the two go together. But that's the latest news. And some of you don't watch the news. You are probably lucky. Okay. Life goes on without watching the news. Okay, so William, we're on 4A. Give me the first entry. 6-4A, folks.
Okay. I wrote down accounts receivable, Beartooth, Co. 47040, and then credit and sales.
All right. I guess page 352, as Morgan told me. Like,
332, sorry.
I mean, what?
It's on page 330.
232, right, 232. 332, that's what I've got written down. I don't know what I was repeating there. But anyway, so William just had a sale.
And then I debited cost of merchandise sold and credited merchandise inventory.
Now, don't forget that on a test. You can have some of these examples written down if you want to. Whatever you can get on one page of notes. And I have seen students have their fonts so little before that I couldn't read them. Maybe with reading glass or a magnifying glass I could have. And some of you can write small. Okay, Morgan, how about the next one?
Debited delivery expense for $11.50, credited cash for $11.50.
All right, now we sold this merchandise, right? But now it's FOB what? Had to be FOB destination, didn't it? Now, William, also, you recorded that net, didn't you? You recorded that net. All right, so Morgan, debit, delivery expense, and credit cash. All right. On the 5th, they sold more merchandise, and then we paid more freight. All right, same entry as William had. Same entry that William had. But where did we pay that freight at? Where's that freight go?
On the 9th,
The what?
August 9th, we paid the freight for the 5th.
On the 9th.
That will be on the second part, keeping one for each business.
That's right. It don't apply. We're doing these for the buyer and seller, aren't we? So it don't apply to the buyer. All right. So we're going back up to you, William. What would I debit if I were the buyer?
Merchandise inventory, credit cash.
It's accounts receivable.
Oh, for
So
15.
it'd have to be accounts payable.
Okay.
Yeah. All right, for net, right? Okay, now Morgan, what did the buyer do for number 2?
Where are we at? I'm sorry.
I probably got you confused. Morgan, let's look at number 2, delivery expense. You gave me that one, right?
The
On the 2nd. We went back to the one that you gave me an answer for.
Oh, okay, delivery expense, yes, $11.50 cashless.
Right. But my next question was, what would the buyer do? Nothing. Okay, nothing. Okay, now that's where the buyer does nothing, the seller does nothing in certain cases. Okay, on the 15th, same old thing. Now on the 16th, we receive cash and credit accounts receivable. Now, Evan, what happened on the 20th for the seller? What happened on the 20th?
Standard customer refunds payable for $1,800 and credit cash.
All right, but what happened on the 20th there? Some company paid refund of $1,800 for defective merchandise on the August 1st purchase. They agreed to keep, all right, the buyer agreed to keep the inventory, didn't he? So there's no return of inventory. So all you're getting is a refund. You're given a refund on merchandise, but you're going to let them keep the merchandise, right? Some companies will do that. Okay, now I'm not going to pick on you. I'm not going to pick you all to death tonight, okay? So let's just glance at them. On the 25th, we received cash credit accounts receivable. Now, on the 31st, we had some more customer refunds payable. But now this one was different. What was different about the 31st? Read that one. What was different there? Do you see the difference? Now look at this. Look at the 20th up here, folks. Customer refund payable. You gave the customer a refund. It kept the merchandise.
Oh, this was a credit.
All right, here, you're giving the customer a refund, but you get back the inventory, don't you? You get it back. And you debit merchandise inventory and credit estimated returns inventory, which I wish they'd still use cost of goods sold right there. So try to get those sorted out. Now we're going to look at these same entries again. All right. Now up here, when William bought inventory, he debited accounts receivable, credit sales. He debited cost of goods sold and credit merchandise inventory. That's when William sold inventory. But here, if William were buying inventory, he'd debit merchandise inventory and credit cash, wouldn't he? Okay, so that, or accounts payable. So that is your first three entries. Four entries. But now you paid some off on the 16th. On the 20th, what'd you do on the 20th? Send back 1,800 or no? They give you an allowance, bad merchandise, right? Had a scratch on it. So you debit cash and credit merchandise inventory. They debit refunds payable and credit cash. Remember, everything has a reverse. I want you to look at that last entry on the 31st. One, you didn't have an entry at all, but you just debit accounts payable and credit merchandise inventory when you send the whole thing back. Debit accounts payable and credit merchandise inventory. So the buyer's entries are not as hard as the seller's entries. Now, none of them did we have sales tax payable on. Now, if we did an income statement on part 5, now, folks, try to get a handle on this income statement. Morgan, did you get gross profit of $3,493,000? Okay. William, did you get administrative expenses? Total operating expenses of $2,528,600. Okay. Evan, did you get net income of $943,400?
I didn't get to that today. I only did 4A.
Okay. Okay. I know Evan's not slacking on me.
I did this time, I guess, because I only did one of them.
Yeah, okay. Now, this is the new income statement, folks. I doubt that you'll have one on the test. I doubt that we have time to put everything on the test. But you're going to have from this chapter interest from buyer and interest from seller. And you're going to have multiple choice on shipping point, destination, discounts, returns, allowances, all that. So please know this part of the chapter. Now, on the appendix, I would like to, and of course, this problem had an equity section and a balance sheet. The only thing new on your balance sheet is you've got merchandise inventory and estimated income, estimated returned inventory. All right, Morgan, did you and William get $5 million liabilities and capital plus assets?
I didn't get all the way to
All right.
Yeah, I got that for assets.
Does yours match, Morgan? The what?
For your total assets was
Yeah.
5 million and then total liabilities.
Right. They just better match, okay? And don't ever forget on a balance sheet to take out that accumulated depreciation from your fixed assets. Classified balance sheet because we've got current separated from property, plant, and equipment, and we've got liabilities, current separated from long term. Did I give you a bonus problem on this chapter?
Last week, that if we did one of them, that you put +5.
Which one did I say would be a bonus, Morgan?
I'm almost positive it was number 25 on page 326.
Exercise 25. Let me back up and look at it. Can anybody back her up? William?
those exercise 25 in chapter 6.
I'll go back and see what that was.
It was a multi-step thing.
There's 24. I got AC and A. Was 25, was it this company here? That's it then, isn't it? Well, you see, I don't have an answer, but I have all the questions, I guess. Now 25, if I keep going through this, I go down to 28. This must have been 12, 27, 26. I don't have a good answer on it. You didn't have a good answer. So save that for 2 weeks from the night to turn in. Now, for sake of time, I'm probably not going to give you a lot from the appendix. Perpetual used to be used greatly. It is, periodic. But in a day of computers, we can pretty much bypass it. Now, there's only one thing I want you to realize on periodic, and it helps you in the next chapter. And here's what it is. So let me. All right. Whether it's the appendix, beginning inventory, plus purchases, that'd be periodic, gives you merchandise available, minus ending inventory, gives you cost of merchandise sold. All right, we're going to practice one problem with this in a minute. Now, this will help you on some of the things on inventory in chapter 7, but it is periodic. All right, but to get purchases, cost of purchases, you've got to subtract purchases discounts. You have to subtract purchases, returns, and allowances. And that gives you net purchases. Then you have to add freight in. Now, you all know we have class next Wednesday. And Wednesday, is it Halloween night? You all don't live anywhere where it's bad going home, do you? You don't live up in a Holler Creek, Fork or Branch? Well, good. I think those days are gone anyway. I was driving some high school students home one night on a school bus. It was just 2 or 3 days before Halloween. And I guess some good old redneck boys had tires across the road on fire, and I couldn't get by to take those kids home. We had to sit there till the tires burned out or we could move. When I was growing up, we did things like that. We'd put rocks out in the road, old car hoods, or cut down a tree. That's the big thing to do. But it's redneck, even on my part, it's big old redneck. But one thing I did do, I'd sit there to make sure the person who came along was able to move that or didn't have sickness or something that they had to get through real quick. But I've had night classes over the years on Halloween night, and some of the students were afraid to come to class, so they couldn't get home. They said there'll be trees across our road, it'll be blocked, and we won't get home if we come to class. So that's why I asked you all that.
I don't have that issue, but I was wondering if you did mind if I live streamed it, because I do have children. That's gonna take trick-or-treat.
Children that are come to your door,
No, like my own children. I was gonna say.
or you're gonna take them out?
Yeah, but I mean, of course, I want to do
Where do you live? Where do you live?
Princeton.
Yeah, and of course, probably by next week, it gets dark pretty much. We only get down here at 6:30, we can get home to 7, but probably should have those little ones out as early as possible and back. So if you have to, you have to. My grandson is 13 down in Cleveland, Tennessee. And some places over 12, you're too old to trick or treat, right? And my same son, when he lived in Knoxville, in that neighborhood, they trick or treated no matter how old they were. But one thing about my 12-year-old grandson, in Cleveland, Tennessee, they have, it's either a Hershey, a Mars factory, or sometimes you go through there and it's the best smell in the world, near that chocolate factory. And, but they give out big bags of different kinds of candy to anybody, adults, children, whatever. And even adults dress up to get in that line to get that bag of candy from Mars. So that's a neat way. So, but yeah, that is a pleasant smell. My sister lives in a little town in Nebraska where there's cattle pens of 30 and 40 cattle bunched together just a couple miles away. And when the wind blows, she can't stand the smell.
So that'd be the opposite effect of Mars candy bars.
Totally opposite. We know what's pleasant and what don't we? Perfectly right, Morgan. Now, keeping this little format in mind here, I'll show you the real format in your book. I mean, this is a real format, but I watered it down there with abbreviations. If I can find it here, I'll show it to you. I don't think they even show it. Yeah, they do. Yeah. Okay. Page 312. You take beginning inventory. Now you can see purchases. You can see where I subtract discounts and returns and get net purchases. Then you add freight in, and that gives you cost of merchandise purchased. So that's what this is, cost of merchandise purchased after you add freight. Now, after you take these two out, you get net purchases. So what you see there is a watered down version of what you see on page 312. All right, you get merchandise available for sale. You subtract out ending inventory. Now, your final answer should be cost of merchandise sold, 525,300. But you increase an estimated returns inventory, -5. Now, I'm not worried about that -5. I'm worried about you getting down to cost of merchandise sold. So let's do a real quick little exercise and we'll soon leave this chapter. There's so much in these chapters. Oh, I do have to go with one other thing. Okay, I want you all to go to page 320, 329. All right, do exercise 37. You at home, you should do the same thing. Use the format. So I'm going to give you about 5 minutes. Just put it on plain paper. Use the format in the book or what I scribbled on the screen. Are we there yet?
I'm working on it.
Okay, let's go ahead and look at this one if you would. Take your beginning inventory, add your purchases. That gives you merchandise available for sale. Now your purchases, first off, you've got to subtract out returns and allowances and discounts. And remember, this is just a, boy, that's an exercise way over there, isn't it? That's periodic, but you need to know it for later on for materials and for managerial accounting or cost accounting, and you just need to know it. All right, beginning inventory, purchases minus returns minus discounts gives us net purchases plus freight gives us cost of goods purchased. Add that, we get merchandise available for sale, subtract ending inventory, and as long as you went down to 454.5, I'm okay with it. Cost all merchandise sold. Okay? Did you get that, Morgan? 454.5?
No, because I didn't subtract the purchase.
All right, did you get it, Evan?
Yeah, I ain't got that for you.
Did you get it, William? All right. One not close, one got it, and one somewhere in the middle. That'd be Morgan. All right. If you didn't get that one, try the next one on your own, number 38. Okay. Now I'm going to take you back real quick to number 32. If you would look at number 32. Anyway, asset turnover. Now later we'll have inventory turnover, but asset turnover if you look at number 20, look at 32, and let me show you 32 real quick. It's very easy little concept. You are taking the beginning and ending assets and dividing them by 2. Whatever that gives you, divide into the assets of 108,000 or revenue, and you get asset turnover of 3.63. Now, the bigger the better on that. Bigger the better. Okay. Now, we're going to leave this chapter, but you got your bonus to turn in. I would suggest some of you probably even practice number 5A. If you didn't get that one, well, 5A, you still can turn that in 2 weeks from tonight. I would suggest that you practice 3B and 4B. If you didn't do well on those tonight or you didn't do them, do 3B and 4B. You got to get those entries on buying and selling. You got to know that income statement. That's the big concept in this chapter. All right, we're going to take about a 10-minute break and we're going to come back and hit chapter 7. And I ate somebody's food down over the hill, and I'm still tasting. That's not a good sign.
Might want to take you some time.
Don't like to taste it twice, do you? Oh, you want to start classing the food?
I can barely get my head around one.
That's right. That's what I'm saying.
Good thing I'm not major.
No, so.
I would agree, it's probably the most useful one.
It's good. Yeah.
What semester are you on?
I don't remember how many credits I transferred. I've done it on different. Almost completed your school one. Started business. I managed probation. School came first. That's-
Can't figure out exactly what you want.
Yeah.
Just kind of go simple.
I hopefully, I'm gonna finish regardless. I just can't decide on which one to do. Stick with this. I think I can. There was enough credit for the high school. I still got a long way to go, especially where I only did one this time. Do you know when sign-ups are for
I already got one.
Friday?
And my advisor already told me that he set up a fund.
Really?
Unless I
I'm glad because I didn't know.
think that's my other goals. I went, I'm in international business and I went to Dr. Bourne to test for him earlier today because she was taking at 5:30, but I didn't want to be early again. So I took it early and as I was leaving, he was like, oh, hey, by the way, we need to set up an appointment. Your advisor. was like, oh, yeah.
Oh, so that's who you.
Thanks for showing me.
Well, at least you know that. I had no idea.
And then I have to cover me again for my appointment, yeah, which is good, because, you know,
Yeah.
of course, if I fail economics, then,
I doubt you will. It'll be fine. That bad, huh?
it's going to look rough.
Is it? Do they do a lot of quizzes like this or? I never even more. Get, yeah, get better chance of getting better numbers.
Yeah, every week, it's like one quiz, one set of math problems, and then one like set of chapter questions. Gotcha. I don't always get through math problems, but I always do the test, and then I almost always do all the chapter questions, do this just like vocab. But I get 10% of that problem. So just can't figure it out.
And William had to leave.
Yeah.
Was that one of those?
Oh, well, we're back. So things happen. William has good attendance. He just,
Oh, I didn't know
he told me at the beginning of class he had to leave.
that.
So he gone. Do what?
I said, okay, the pressure's on us.
Oh, well. All right, we'll make it. All both of you. I want to look at chapter 7, PowerPoint, just for a minute, even though I showed you the, and with PowerPoint and with this setup, I find myself setting a lot. I was never used to setting in class, and but I have to do it to work this Surface Pro thing. But I don't like to. And we went over periodic tonight, and I think you can get that pretty easy. All right. Here it says one objective is to safeguard inventory from damage or theft. Now, inventory on financial statement, we just know it's a current asset. Hey, this PowerPoint's gonna let me write, but it's a current asset. Theft, we've talked about shoplifting, lifting, and employee pilfering. And that goes on a lot. Some people don't have a conscience and so forth. I told you a story where a mining company was loading up extra mining stuff on delivery truck, delivered to a coal mine, they'd load up double the order and they'd unload one load at a secret place and sell it in Ohio. But the bookkeeper, the delivery man, and the warehouse manager all got caught. Now, these people usually get caught. Mr. Amel was telling me about two situations. We worked with a fella, his last name was Hill, and we hired him as one of the accounting faculty. I was on the committee, and my dean couldn't believe I was not for him. And I wasn't. But we hired him. He was actually a coach in a little league football game where my dean's son played football for it. That's why he was hired. Said he had a CPA, and I looked up a list of CPAs. He was not on it. He lied. Well, thank goodness he went to UVA Wise as accounting faculty on their Aberdeen campus. And he was caught. He had a tax business, but he was caught. Him and a restaurant were in cahoots. The restaurant would give phony W-2s the people who didn't know they worked for the restaurant. He would file their tax return and get them back earned income credit and get back a tax refund that had never been paid in. Well, he got fired at UVA Wise, and he went on to federal prison up here in Beckley. I don't know if he's out yet or not. Then there was another fellow there I liked the guy. Last name was Jesse, I guess. Don't care to mention their name because they were crooks. He got a master in taxes at, I guess, Motivation University online. And my boss wanted him to teach for us. For some reason, I was against that, even though I knew the guy and liked the guy. But he was keeping books for some businesses, and he was embezzling from all those businesses. State police came in and confiscated his computers and everything. And the last I heard, he was up here in Beckley. All I'm trying to say, you do get caught. No matter how good you are in accounting, I can tell you all the ways to embezzle at a bank or any other business. Or if you're a clerk at a store, how to steal. But you'll get caught eventually. It's a good thing you do. Friend or foe, I never had any sympathy for anybody who got prosecuted and had to spend time if they were guilty. Okay. But anyway, we've got to safeguard our inventory. Now, if you have a whole bunch of inventories, you can have subsidiary ledgers, just like you have a subsidiary ledger for accounts receivable and accounts payable. A physical account, whether you use perpetual or periodic. Now, 3 identical units are purchased. Now, you can see here that we have inflation. And you can see here the average cost is $12, which is somewhere in between 9 and 14, but not totally exactly. Now, if we were using FIFO on the perpetual system, May the 10th unit sold, May the 18th unit sold, and May the 24th units sold, $20. But the cost of merchandise sold, depending, could be 9, 13, or 14 as we went through that. That changes your gross profit. Here you would pay less taxes. Here you pay more taxes, you'll have more net income. All right, so it's important, if you choose a method, IRS says you have to stick with it. You have to get permission to change. So that's the 3 methods they're talking about right here. And these 3 methods, all right, for purpose of illustration, the data for item 127B are shown. Now we will examine the perpetual inventory system. Now we're going to do FIFO. Now I could do this without filling out that sheet, but Evan, do you and Morgan have a sheet with you, a blank sheet, or did you use them all?
I got a blank sheet.
All right, you got a blank sheet. All right, let's put one on there, FIFO. Now you have FIFO and LIFO on the test coming up. I'll get you ready for this test next week when everybody's here. All right, I want you to put on that sheet your inventory over in the third column, third box, third part. What do I call it? Yeah. Over here under inventory, put down your number of units and the cost and multiply and get the total, which would be $20,000. Okay. Always put down your beginning inventory. Now, we're gonna sell 30 units. So go over to your middle columns. Under cost of goods sold, let's sell 30 units. It don't matter if you're FIFO or LIFO right now. You've only got one inventory. So we sell 30 units. We sell 700 units at $30. So that's $2,100, isn't it? We're selling $2,100 worth. No, wait a minute. I'm sorry. Is that $30? Yeah. I was looking at that as 20, sorry. Morgan, you probably caught this now. Something's wrong here. Okay, here's what's wrong. I'm looking at it wrong. We had $20,000 here, didn't we? Now we're going to sell 700 at $20. But we don't have to worry about the sales price. We want cost of goods sold.
We're selling at 30 though, right?
Yeah, but we don't put that down. That's what I want to cost you about. $20. How many units you sell? Unit cost $20. That's $1,400. Now go over there and put your inventory in. You've got 300 left. Put your unit cost in $20. Put that down both places. Now you've got 300 left at $20, which makes how much? Oh, 320 is $600. Or is it $6,000? $6,000. All right, now up here, let's back up. 700 at 20 would be 14,000. All right, now let's look at what you've got. You had 20,000 inventory, right? And you sold 14,000, right? That leaves you 6,000. Now does it make sense? Okay. Now we're going to purchase 500 units. So go to your first column under purchases. We're going to purchase 500 units at $22.50. Use your calculator. I can't do that in my head so good. Probably could. How much is that? 11,100.
200.
250. All right. Now, I want you to take that over to your inventory. And I want you to use parentheses right here. Does this work? Okay, well, yeah, let me use this one. I want you to use parentheses, brackets, or braces, or something. Okay? Because you've got two inventories, okay? Now, I want you to bring down the 300 units at 20. 300 units at 20 is equal to 6,000. Then I want you to bring down 500 units right here at 22.50 is 11,250. Now I want you to put your dates over here. Make sure you put your dates. See if you're following me. I believe you are. Yeah, you are. So on the 16th, I just want to see what you've got. You've got 300 at 20, you've got 500 at 22, whatever. Okay. Now we're going to sell 360 units. Now under FIFO, what 360 am I going to sell? What 360 do you think I'll sell?
The first 360.
Yeah, sell 300 at 20, put that in your cost of goods sold. 300 at 20. Then you're gonna put down 60 at 22.40. Now I want you to put those little brackets or braces or something around it. Yeah. Okay, to show that's the same date.
Is it 2240 or 50?
Oh gosh, I gotta look at 2240. What does that leave you? How much does that leave? How many?
140.
All right, now these are all gone, right? Okay, how many of these are gone? Now, wait a minute. Now we had 1,000, Morgan, and we sold 700, right? That left 300.
You purchased 8.
We purchased 5, that gives us 800.
Yeah.
Well, we only sell 360 here, right here. So how many does that leave us?
440.
440 at 2240. So put that in your inventory. And what does that leave you? That left you how many?
440.
All right, 2240. And what's that total?
9,050.
Okay, now we're going to sell 240 more. Naturally, they come out of the 500, and we're going to cost is going to be 2240. Sell 240 more at 2240. Now, how many does that leave you after you took 240 out? Does that leave you 200?
Yes.
200 at 2240. Bring that over on your inventory. Now you're going to purchase 600. What is 600 times 2330? All right, hopefully I have an answer here. And hopefully your card ends up looking like this. Be sure to put your 200 at 2240, 600 at 2330, and put brackets around it so you'll know it's same date. And then bring down your balances. You at home, hopefully you'll practice this the same way to make sure you know it. Now, of course, this thing has journal entries that goes with it. Debit accounts receivable and credit sales, debit cost of merchandise sold, buy merchandise, sell merchandise, and sell merchandise, and buy merchandise. Just like we did in chapter 6. Got it? You got it. Okay. All right, Evan. Morgan, is that not big enough for you?
Well, I had contact saying in the chamber registration, and now I can't see, so.
Well, half the time I can't see
The
either.
31st, I really can't see.
It's pretty small.
Okay, I can see that.
I really went out of whack there. I don't know what it did. Shucks. Every time I try to zoom it, it. Got it?
I can see.
Got it? All right. Now we know that LIFO would be reversed, don't we? And we know that average. Now I'm going to show you average here, but we're moving on with it. All right, here is your ending inventory. Now, sell something, it doesn't matter. So I don't even know how I ended up with red on my pen either. All right, but every time we have a purchase, we have to recalculate. We've got to take the 300, we've got to take the 11,2 and add the 6,000 to make 17,2. So now we've got 800 units divided into 17,2. That gives us a new price, average 21.50. We only do that after a purchase. We don't do it after a sale. So you got three methods: FIFO, LIFO, average, perpetual. Three methods: FIFO, LIFO, average, periodic. We'll review all of these next week.
There's not 10 different ways.
What?
There's not 10 different ways. I could have sworn so last week there was 10 different methods.
Well, we've looked at 6 tonight, 3 periodic and 3 perpetual.
Oh, okay.
But there's 4 to go.
Oh, so there is 10.
There is 10 there.
Okay.
Now, one of the 10 is specific. If you're a furniture business, you got a living room suite, you put down the specific cost you paid for it. Jewelry store, diamonds are so different in price and quality. You'd put down the specific cost. That's an easy method. We've looked at 6, all right? Pacific is 7. Now we're going to look at lower of cost or market. Now, I've always said this method, I could pick somebody out of the hall and they could get it right. And this method, I've always said a blooming idiot can get it. Okay? So I know a budding accountant can get it. Okay? A budding accountant. It's easy. Right here, Evan, which one is lower, cost or market?
Market.
All right. On Sierra down here, no, let's go to Tango, Morgan. Which is lower, cost or market?
Cost.
All right, I told you a blooming idiot could do that. It's easy, okay? All right. I'm glad both of y'all got that. I would hate to say a blooming idiot and one of you miss it. Okay, so that's 8 methods in it in Morgan. Okay, we're going to look at inventory errors. We'll talk about next week. Consignment. The manufacturer's called consignor. This goes with Hallmark cards a lot. They retain title to the goods, but they may ship it to a Hallmark store and they've got it on consignment. Now, you may also, this may work with TVs, but now there's a lot of consignment stores out there, whereas you take, did you ever take any of your personal items to a place on consignment and they sell it for 1%? So there's that kind of store out there. So who owns the title to this inventory? The manufacturer does, if it's just an agent, okay? The consignor retains title. let's talk about inventory turnover. You take cost of merchandise sold over average inventory. You get average inventory by beginning plus ending and divide the total by 2. That's easy enough. You can have that formula written down in your notes. Okay, so if this is beginning and ending inventory divided by 2, and we divide it into cost of goods sold, we get a turnover of 5.93. Year 1, it was 5.62. Which one do you think's better?
5.96.
All right. Now, Morgan, don't you like to have a lot of turnover of your inventory supplies at McDonald's? The faster you turn over your inventory of hamburger meats means the more you're selling, doesn't it? So the bigger, the better. It'd be better if you'd turn those hamburger buns over once every 2 days. That would be half of 365. All right. It'd be good if you could turn your hamburger meat to keep it fresh over 365 times a year. But how long do you keep hamburger meat? About 3 or 4 days?
We always sell through that by the time we get truck it every 3 nights.
So you turn it over every 2 days. All right. Divide 2 into 365 and you're turning over that much. This is days sales in inventory. I'm not worried about that right now. Now in the appendix, we are going to cover it, the retail method. And we're going to look at the gross profit method. Okay, you take your retail, beginning inventory and cost. Now remember that little formula I gave you guys? I said beginning inventory plus purchases gives you merchandise available for sale. Now when we ever get down to minus ending inventory, then we get cost of merchandise sold. That little formula I gave you back on the other chapter in the appendix will work with this. Okay, and we take our cost divided by retail, and that gives you a ratio. So your cost is 62%. In other words, we're saying cost is 62% of retail. Retail's 100%, cost is 62, gross profit's going to be 38. Okay, now if we sell at retail 70,000, that leaves us 30. So we can multiply it by the cost, 62, and get ending retail at cost. We're going to practice those before next week. Gross profit method's about the same thing. Now, we know that Bill can take a $10 shirt and mark it up 300% and sell it for $30. Well, they can give you half off and sell it to you for $15 and still make a profit, can't they? All right. Clothes are marked up 200 or 300%. Groceries only 4, 5, 6, 7%. Automobiles anywhere from 12 to about 38 to 40% markup. Furniture, a good 100%. Morgan, do you have any jewelry on?
Just a bracelet today.
Do what?
Just a bracelet today. My wedding set.
Do you know how much a bracelet costs?
No, off the top of my head, it's a wedding present.
All right, let's say somebody paid, well, it's probably more than that. You probably had nice friends, at least maybe 100. But if they paid 100 for that, the jewelry store could have paid as little as 10. And they marked it up 1,000%. So jewelry is marked up. Evan, have you ever visited either one of the countries where your ancestors came from?
Yeah, I go to the Dominican Republic all the time.
Do
I've
you?
got a lot of family over there.
Now, the Dominican Republic, is that down near near El Salvador or Honduras or?
It's in the Caribbean. It's like next to Jamaica.
Okay, that's right, Dominican Republic. It's not in Central America. That's right. What island is it close to?
I think it's right there by Haiti. I think that's the closest one.
Which one?
Haiti.
Haiti.
Don't quote me on that though, but I think it's right there next to it.
Well, I get mixed up with the Caribbean, like St. Thomas. That's still Caribbean, isn't it?
I couldn't tell you really. I'm not sure.
Or are they considered like the Bahamas?
So
Huh?
I would consider homeless.
Yeah, I went to Jamaica, Nassau, and there are Bahamas. But is the Bahamas in the Caribbean?
I think so.
Okay, something like
I'd
that.
say have to look at it.
But now down in Dominican Republic, you all never have snow, so always nice weather.
Yeah, we like to go in winter because it's too hot in the summer when we go to visit.
Yeah, winter would be nice. Like the Philippines now, they vote in our elections because they're a United States territory. And I don't know if Guam is or not. I know the Philippines is. Yeah, Dominican Republic. But now, Dominican Republic is a Spanish-speaking country, right?
Yeah, most of them know English also. 'Cause
Oh,
they have to
yeah.
learn it in school.
Well, yeah, that's like some of our international students. They know 5 or 6 languages. And a lot of those people coming up from Honduras and El Salvador, they speak English. They talk to reporters.
Yeah, my mom was born there, and then she moved over here. Got her green card.
Do you speak Spanish pretty good?
She never really taught me because I grew up here in West Virginia,
Right.
but she grew up in the Dominican Republic. But she never really taught me.
Oh, yeah. And the religion in Dominican Republic is probably mostly Catholic.
Yeah, she grew up Catholic.
Yeah. I've got 2 little they're great, a niece and a nephew born about the same time in Detroit, and they're going to be Christian in the Catholic Church. But I've got relatives that are Catholic. A couple of sisters married Catholic guys, and they changed over. I got a niece that married a Mormon person. She changed over, but she's changing back. She doesn't like Mormon. So, and Millie, which we call her, that's not her name, from Serbia, she said she was Orthodox Christian. I think Orthodox Christian, according to her, was first cousins to the Catholic Church, something like that. So, but anyway, religion is interesting, and the only thing I say about religion, if it makes you a better person, it's okay. Okay. And race, I think every man is equal when it comes to race and should be treated equal. Anyway, Evan, I'm surprised you haven't learned Spanish. Even at my age, I feel like learning it because we run into so many Spanish-speaking people. And they say if you go up in D.C., even all the McDonald's are ran by Spanish. And Mr. Imo says you about have to be able to speak Spanish to order at McDonald's.
I do want to learn it. I want to learn it, but my mom isn't really a teacher. She never really.
Well, you probably can get some kind of something on your cell phone that converts and teaches you.
I want to because all my family speaks it, but they all speak English over there also. So when I talk to them over there, I can just.
Yeah, but when they're speaking Spanish, they're talking all kinds of things about you. You don't know it.
That's true.
going to the nail salon.
Huh?
Like going to the nail salon.
Yeah. They talk about you, Morgan?
Oh, no, it's just, they usually do talk about it.
Oh,
Their
yeah.
language, so you don't.
Oh, the nail salon that's that's got Taiwan.
Yeah.
Yeah, all that is. Okay, so we have a markup on goods, and as I say, sales is equal to 100% of anything, and your cost of merchandise sold, even if you had a 300% markup, your cost of merchandise sold still may be only 60, cost of merchandise sold. And then, of course, your gross profit is the difference, and here it would be 40%. So here we're saying gross profit is 30%. So we take our costs plus our purchases, gives us merchandise available. Now we sold 250. Well, if our gross profit is 30, then the easiest way would be to say cost of goods sold is 70. You could have multiplied 70% times 250 and got the same answer. So anyway, cost of goods sold is this, and your ending inventory would be 62. There's your 10 methods. Okay? All right. We're going to dismiss in a couple of minutes. That was great food. I either eat too much or I eat something that didn't like me. I liked it all, but I keep tasting that and it's miserable. And I will have to stop and get some Tums or something on my way home. Let me give you all some assignments. Cengage. How are you doing on Cengage with chapter 6? Finished?
Almost done.
Almost.
It's almost
Now, did they give you the perpetual stuff on Cengage? And you went through that. They gave you per audit on Cengage. Did you have the gross profit or the retail method on Cengage? Okay. So you've had it about all, right? No, wait a minute. That's chapter 6. You haven't got chapter 7 finished, have you?
Right, chapter 6.
Yeah, when you get chapter 7 finished, you'll get all these methods.
Oh, I thought you meant like.
Yeah, I know. I got mixed up too. All right. On chapter 7, I do want you to be practicing the methods. So please practice exercise 12.
On chapter 6.
No, this is 7, dear. Page 381, chapter 7, practice exercise 12 and practice exercise 7. Now on the appendix, I want you to practice exercise 25 and 26. That's in addition to do all you can on Cengage, okay? But I am going to let you go. That food was I was eating it. Now something.